Tidjane Thiam, thank you so much for speaking to Bloomberg.
Good morning, thanks for having me.
You have results out. Anything that you're a little bit concerned going forward? They seem to be pretty much on track.
This is a very good, we believe, set of results. Let me just give you one or two examples. Both in IWM International and Asia, we have generated as much profit now as we did in the whole of 2016, which is a very, very strong performance. 10.4 billion of NNA in the quarter. That's a record for us. Assets under management are at a record level and margins are up. To raise AUM is difficult. To raise AUM and margins are up 20% in 2 years. So really, the wealth management results are very strong and good resilience on the global market and IBCM side. Global market, you'll see the headlines, fixed income minus 8%, which is in this context a creditable performance, and equities plus 5%, which is also in this context a good performance. And IBCM struggled, but it's a long pipeline business. We're at about the same level as last year, and we think we have a good pipeline, so reasonably confident. And capital, most importantly, capital is strong. You see we're at 13.2 after taking a 26 basis point up risk charge, so we would have been at 13.4 otherwise. And cost, we're way ahead of I think the market at 4.4, the consensus was at 4.5, 4.6, so well ahead of our target for this year.
What will trading and the global environment be for global markets going forward?
It's frankly difficult. In October, we haven't seen a fundamental change compared to the conditions of the third quarter. That will be our main message. We have seen towards the back end of the month a pickup in activity. So October is a decent month, but we're very cautious looking forward with all the uncertainties we know.
Any more cost cuts or layoffs?
We are getting close to the end of the restructuring. We said we would hit 4.8 billion of cost by the end of 2018. Will be around 4.9, probably something like that at the end of this year. So we're close to the goal.
So you're 2 years in from your 3-year plan. What comes next?
Oh, you mean after the plan?
No, after the next year. What comes in?
Oh, next year is really concluding the plan, delivering on the big things we said. We said we'd grow. AUM is up 11% and 12% sequentially year on year. Grow profitably. Margins are up 20% in 2 years. We said we'd cut costs, go to 18.5 by the end of 17 by the end of 18. We're well on track to hit those targets. We said we'd de-risk. We've cut VAR by 53%. If we took down, and we talked about them, the event of Q4 15, Q1 16 through global market today, the losses would be 2/3 less. Only 1/3 of what they were 2 years ago. That's the amount of de-risking that has taken place. That's why we talk about higher quality earnings, because the numbers are comparable, but we're running 1/3 of the risks. So that's good. And capital is very strong. So once we close the SRU, because that's the other thing, if you look at the core, profit is up 29%. If you look at the SRU, it went down 38%, and that's what's multiplying the total profit by more than 300%. It's a double leverage, if you wish. As the SRU goes away, then emerges the real Credit Suisse from 19 onwards with very good returns.
In the SRU?
In the SRU,
yeah.
Quite a bit of derivatives. Okay. We're at 17 billion of RWA. Now we said we'd hit 11 by the end of 18 and close it. So we're very close to the call. A lot of derivatives, long-dated derivatives. And to change them, you need novations, you need compressions. We don't always get the agreement of a counterparty. So what will be left there is let's call them a number of long-dated trades and also a few loans and things like that. But we're getting to the end of it.
You have a shareholder, activist, investor with a minimal amount of shares. Have you spoken to him?
We have been in touch. I must say they behave very correctly. They approached us in September. There's been meetings between our teams and them. I have not yet personally met him, but we have a meeting scheduled next week. What I need to say is we welcome and we listen to the views of all shareholders. That said, we believe our plan is very good. I think this is a very strong set of numbers in a very challenging quarter. I mean, you've seen the industry. You can benchmark what we've achieved in the context of the industry. So we think this plan is working very well, and so why change?
But would you be looking at, I mean, are you completely refuting the proposal that he's put in place to spin off investment bank and your wealth management, or is it something that you would consider?
We think this plan is working very, very well. And we'll explain why today, but the unique thing in our approach is the integration between the asset management, the investment bank, and the ultra-high net worth strategy. More than half of these flows I've showed you are from ultra-high net worth. more than half. And in the emerging markets, it's 60 to 70%. An example, I was with a client last week. He's a multi-billionaire. He's got several $100 million with us under management. He comes to Zurich. The day goes like this. In the morning, he sits with our teams to do his asset allocation, his management. He has a 800 million factory that he's building somewhere to export in 50 countries. He then meets our sector specialists. We're helping them structure that project. He's also got a multi-billion-dollar company that he wants to IPO, and that's the afternoon. And he finishes the day with me, and he said, you're a one-stop shop, and I love it. And I told him I wish I could record you for my investors and for the journalists. And I hear it. Many of my colleagues hear it. Our ultra-high network clients want best execution, best-in-class execution, and we need to have those capabilities for them. Otherwise, they'll go somewhere else.
Tidjane, talk to me, please, about Brexit. When will you make a decision on a European hub?
Look, we haven't made a decision yet, as you know. We are looking at this carefully. We're just taking our time. We have teams working on this very closely, very carefully. We're looking at various options. We're also talking to various governments to know exactly what's on the table. So there are two sources of uncertainty. One, you don't really know what Brexit looks like. That's one difficulty in making the decision. And two, you haven't really concluded your conversations with various governments in various places. So that process is going on. Of course, as soon as we reach a conclusion with the board, we'll let you know, and our people know first.
Is there a key point, a sticky point that you're trying to figure out with governments or cities?
No, it's a broad range. It's a broad range of conversations, really. It goes from real estate to labor laws to taxation to a broad range of issues.
When you look at the macro environment, I know you talk about uncertainty in geopolitics. So do you expect markets overall to be a little bit healthier in the next 12 to 18 months? Is volatility going to be back?
You know, over the years, I'm always reluctant to make market predictions because they generally turn out to be false. I think what we can see is that I think the world economy is stronger than it's been in many, many, many years. I think everybody can see that. There are fewer countries in recession than ever in memory. So the economies are really doing well. You see China has really held up. You see the emerging markets really strong. You see the US economy going at 3%. Lately, Europe coming back, which is kind of quite unexpected, with Mr. Macron and France being back on the front foot. So really a lot of positive all over. Yes, geopolitical uncertainties make us nervous because that's the black swan. That's the thing in the background that can always drag things down, and nobody can predict that. So I would say we have a cautious stance. This is why we want a strong capital position. We are positioned quite defensively. And that's the most we can say at this stage. How
much do you follow the Fed and the Fed decision, which we're expecting imminently?
I mean, I follow it. The Fed is a hugely important stakeholder for us. We have an IHC in the US, and they help us manage it. So we have an extremely close relationship. So, of course, we follow that.
But does it make a difference who's in charge, or are they looking all at the same data? Or is it?
I think we're just waiting for a decision, and as soon as the decision is made, we'll engage with the team that will have been chosen.
Tidjane Thiam, do you worry about MiFID?
Look, we've done a lot of work on MiFID. We've been quite public about some of our decisions. We've decided not to charge for fixed income research. For equity research, we will probably charge. And as far as we are concerned, we've also decided with Credit Suisse Asset Management not to pass on that cost. So it was more worry before because there's a lot of work to prepare all this. Now we're getting close to the deadline, and I think we have to see how it plays out.
Anything in litigation that worries you, keeps you up at night?
Look, one thing I've learned in the banking sector is that there's always a pipeline of litigations going on. Look, you have to keep an eye on them, manage them carefully, and that's what we do.
If you look at the next 12 months, do you think shareholders will be tougher on Credit Suisse now that you've kind of delivered what you've promised so far?
Well, look, it's kind of our job to be tough on us. That's why they exist. We apply a lot of pressure on ourselves, and we're very demanding in terms of meeting shareholders' expectations. We're trading now close to tangible book value. People are very focused on the share price, and it's fair, but we have increased the share count by 47%. So when you talk about the share price 2 years ago and share price now, you have to take that into account. And if you look at the market cap, we raised $4 billion in June. Our market cap is up $7 billion since then. For me, that's a very strong signal that the market believes that that 4 billion is going to create value. And so that's a litmus test ultimately. The first capital raise we did, it was the opposite because it was really to repair the balance sheet. This one is to prepare the future, and I think it's very well supported.
On the investment bank, you're quite optimistic, a bit more optimistic than some of your peers. Why?
Well, maybe we didn't quite draft the outlook statement right, because it's not what we wanted to convey. By saying that the October has been like the third quarter, it's not a very positive statement, because it's still very low volatility, very difficult. It's a tricky situation to describe, because we have a good pipeline. The engagement with the clients is good in IBCM. The problem is what constrains the willingness or ability of the clients to take decisions is the environment, and that you don't control. So it's what we've seen in Q3, a lot of good conversations, but people don't pull the trigger because of the uncertainty or the questions they're asking themselves on the Fed or central banks or North Korea, etc. So that's the unknown. So I would say we're cautious.
One final question on wealth management. Is there a particular, I don't know if it's a part of that business that's doing better than others?
It's really the same strategy we're driving. The ultra-high net worth strategy, I told you in Asia we have 5.8 billion of NNA this quarter. 5.8 billion, that's frankly kind of unheard of. And in international wealth management, it's the same thing. Again, we'll talk about it this morning and also at Investor Day, how we manage those ultra-high net worth client, what they request from us, and that model has worked superbly. And there is a perception sometimes out there that we get this growth by lending, and we'll debunk that, because we actually get this growth by providing a comprehensive range of services and deepening our relationship. And the final message is most of the growth in wealth management is through client penetration. Right. So we are not running around acquiring new accounts. We are working in quality with our existing clients, which is why it's so profitable, because every time you have all the infrastructure, and that's pure operating leverage. Infrastructure is in place and you sell more to your existing clients. That's a great business to have.
And it's not for risky things, right?
Exactly. It's not risky, because you know them, you've had a relationship with them for 10 or 15 years, there's no compliance issue, they're already clients, so it's very, very healthy growth.